So here's 6 common estate planning mistakes people make with their 401k or IRA. Number 1, failing to make your retirement account beneficiaries consistent with your estate planning legal documents. If you put in your will, you want your IRA to go to Travis, but on your IRA paperwork, you designate Taylor as the beneficiary, then Taylor's going to get your IRA when you die, even though in your will, you said you wanted to go to Travis. Number 2, failing to name a trust as your retirement account beneficiary when a minor or financially incapable person is a beneficiary. Don't name a 7-year-old as a retirement account beneficiary. A minor doesn't have the capacity to inherit. Guardianship court proceedings will be necessary when a minor is a beneficiary, and they'll get their part of your retirement plan on your 18th birthday, on their 18th birthday. In addition, if you name someone who you know will blow the money as soon as they get it, consider naming a trust for them as a retirement account beneficiary so that it can be paid out to them over time and used for the right reasons. Number 3, naming your spouse as the 100% primary beneficiary. I'm not saying this is always wrong, but if your spouse has children from a prior relationship and you name your spouse as your 100% primary beneficiary, your spouse just might get that retirement account and designate their own child or children as beneficiaries to get the retirement account when your surviving spouse later passes away, cutting out your children, even if your children were your contingent beneficiaries. Also, if you name your spouse as your 100% primary beneficiary, your spouse might leave your entire retirement account to your spouse's next spouse. Again, just make an informed decision on this one. Number 4, if you're going to leave something to charity, consider leaving it from your retirement account. This will save income tax because the charity will get their portion of your retirement account and they won't have to pay income tax. This is much better than leaving an amount to charity from your will or trust and then leaving your IRA to individuals who must pay income tax when they receive distributions from their inherited IRA. Number 5, make your family aware of your IRA and other retirement accounts. I've seen estates settled and then someone pops up and says, "Hey, I found some paperwork and mom has this old IRA where her estate is the beneficiary." If that's the case, you'll have a real mess on your hands. And number 6, not withholding taxes from your IRA distributions. While there's no rule that says you have to have taxes withheld from your traditional IRA distribution, you could be in a bind when it comes to tax time because either you spent the money from the distribution and you have no remaining funds to pay the taxes, or you could be penalized because you haven't made adequate payments of estimated taxes throughout the year.